Back with you tonight. Thanks for staying on. Now, the South African Reserve Bank has released the first edition of its Financial Stability Review. It outlines various risks facing the country's financial system and the markets. Our business reporter Ntokozo Khumalo takes a look.
While the Reserve Bank's Financial Stability Review is released twice a year and really highlights some of the risks to South Africa's financial markets. And for a little bit more on this, I am now joined by the Governor, Lesetja Kganyago. Thank you for your time. Could you give us just an aerial view of some of those global and domestic risks to South Africa's financial markets, some of the new entrants that are seeing in this year's report, as well as those long-standing ones that are intensifying, such as load shedding?
Globally, every central bank is worried about inflation. Inflation rose faster than most central banks thought it would, and it had been more persistent than most central banks thought it would be, and it has been particularly true in the advanced economies. So in a way, beginning to make inflation itself a financial stability risk. What we have then seen is that advanced economy central banks had been hiking interest rates. They've been increasing their policy rates, and with that, the markets kept on expecting that they are reaching the top and very soon they will start cutting their interest rates. But inflation had remained stubbornly high, and that now what we are seeing is that the markets are starting to price that those interest rates will remain higher for longer. With interest rates in the advanced economies remaining higher for longer, it poses a question or a risk for emerging markets, especially those with external and domestic financing needs. And so we have seen capital outflows from emerging markets back towards the advanced economies, and that is posing a particular risk for the financial markets in the emerging markets, because it means that liquidity is also being drained as foreigners are pulling out of the market. It is a risk that we are also seeing in South Africa. It is a risk we saw in 2020 and the height of the COVID, which had prompted the Reserve Bank at that time to step in and provide liquidity to prevent a market dysfunction. It is still within our responsibility that if there is a dysfunction, we would step in and make sure that the dysfunction is corrected. So the two big global risks that have been inflation, and for the emerging markets, not just that inflation is rising there, but that a rise in interest rates in the advanced economies leads to a repricing of financial assets and a realignment of exchange rates across the globe. And then, of course, there is then the added risk that there might still be recession in advanced economies, and if that sets in, it will impact on the demand of goods from small open economies such as South Africa, and that in itself also poses a risk. So that is on the global side, and the last issue on the global side, of course, are the geopolitical tensions. The war, Russia's war in the Ukraine is one. But there are all sorts of tensions in the geopolitical space. Domestically, you've talked about our long-standing idiosyncrasies, such as load shedding. For a long time, we felt that load shedding has an impact on economic activity, that it restricts economic activity. But towards the end of last year, we then started to see that load shedding is also having an impact on inflation, and that is posing a new risk that we had not previously looked at, and that had set in. But load shedding poses also a particular threat to the financial sector. As we stated in the Financial Stability Review, in the unlikely event of a grid collapse, in the unlikely event, which does not mean that it is impossible, though that risk is a significant risk to the financial system. Think of it that banks have to function. If you have to go to withdraw money from the ATM, you've got to be having electricity and all of that. And what we have been doing in the South African Reserve Bank to mitigate this risk was that we had run scenarios from either temporarily keeping the payment system open, making sure that there is an adequate buffer stock of banknotes so that when people have to withdraw money, the money is actually there for them to withdraw. That has also been an important thing. Now, in the previous financial stability review, we highlighted risks which, if they materialize, could pose a risk to the financial stability. Last year, we highlighted the possibility of us being grey listed, and South Africa did eventually get grey listed in February this year. That risk seems like it was priced in the markets, and because it was priced in the market, we didn't see the markets react to it. But it has raised the cost of doing cross-border payments for South Africa, as the counterparties have to implement what is called enhanced due diligence. And lastly, has been the issue that has been foremost. There are sanctions that have been imposed on Russia, for example. Should other countries, including South Africa, be found to have breached those sanctions, there is a risk that the US and their allies might respond by imposing secondary sanctions on South Africa. And if that happens, it could lead to a sudden stop in capital flows into South Africa, and that would be a concern. At the moment, those sanctions are not there. There isn't talk of the sanctions being there. All that we are saying is, should it happen, it would pose a risk to financial stability.
Governor, thank you so much for talking to us. Of course, that was the South African Reserve Bank Governor Lesetja Kganyago for Newzroom Afrika on channel 405. I'm Ntokozo Khumalo in Midrand.